What are the merits of custom duty? Why custom duty is imposed? What are the advantages to the government and public? Import duty controls the smuggling when the import duty is lower. So by reducing the import duty, we can control the smuggling. So what is FOB, freight and board or free on board? So this is the actual cost which is ready for support the factory should not consider. Already I told, once the goods reach to Indian port, any other expenses we do not consider. Hello my dear students, I am Rajay sir, faculty, Department of Commerce and Management, Vidhyaashram First Grade College, MYSURU, Temple of Excellence. My dear students, in today's session I am going to handle the subject Indirect Tax 2, 6M BCom and revision class on custom duty and invoice under GST. Now, let's go to the first slide. What do you mean by custom duty? See, custom duty means, so while exporting any goods from our country to other country or other foreign country, or importing goods from other foreign country to our country, the government of India will levy some taxes. So there are so many objectives why we are levying these taxes. We have objectives. Later we will discuss those things. So let's understand what is the meaning of custom duty. It is a custom duty is a duty or tax imposed by the central government while exporting goods to other country or importing goods from other country. Or understanding. Now, so it is a duty collected from the import and export in India. The power to make laws on custom duty vests with central government. So whatever the tax collected by the central government will not be distributed to state government. It will be completely or purely utilized from central government only. So collected by the central government, utilized by the central government. So it is a there are so many types of custom duty. Under custom duty, basic custom duty is there, IGST, integrated GST is there, countervailing duty and anti-dumping duty. So many types of duty is there, and also cess are available. So social welfare charges is available. Earlier we were calculating the cess. Cess means tax on tax is called as cess. The recipient of revenue from the custom duty, receipt of revenue from the custom duty belongs to the central government and utilized by the central government only. It will not share with state governments. Next point, what are the merits of custom duty? Why custom duty is imposed? What are the advantages to the government and public and entirely nation? So an import source of revenue to the central government. It is an important source for the government, revenue for the governments too. And also when government gets so much of revenue from the custom duty, it can utilize for any other developmental activity and providing or construction of infrastructure for the country. Next one, import duty protects the domestic industries. For example, when the customers or the citizens of the country gets cheaper or cheapest products from other country, so it leads to all customers or all citizens will purchase the other country or foreign countries products. So it leads to demand for our countries or country made products will decreases. When the demand for domestic industries products decreases, so domestic industry will have to close down, and ultimately the nation will be dependent on the other country only or foreign country only. So in future any war or any misunderstanding happens between our country and that particular foreign country, that foreign country may take revenge or may affect this import or export of that particular product. Ultimately the country citizens will be in trouble. So because to produce that product in our country, domestic producers or has stopped the business, and we are completely dependent on other country for that particular product or goods. So once the import or stop or export, that particular country stop the export, in our country we have to face the problem. Next one, reduce the deficit in balance of trade and balance of payment. Again, so when the government imposes so much of tax on the import, so it discourages by importing the tax or by levying the heavy tax on import. So government will discourage import, and also by reducing the tax on export, government will encourage the exports. Export will increases. When there is a government discourages the import, again import will decreases, export will increases. Ultimately, can balance the balance of payment. So in our country, we are facing deficit in balance of payment. Our import is more than our export because we have to import the petroleum product, we have to import the gold and any other metals like precious metals and precious metals we are importing, and we are importing the petroleum products. And also if we import any other luxurious products from the foreign country, it leads to increase in the import and reduction or deficit in the export. So that's why, not to make this balance or equal, government of India is imposing or levying the custom duty. Next one, import duty controls the smuggling when the import duty is lower. So by reducing the import duty, we can control the smuggling. Smuggling means what? So without paying tax to the government or without paying the custom duty to the government, so importing the goods through illegal means. So when the government reduce the custom duty, so by paying some amount of tax, it will become legal. They can easily bring the product with legal means. Next one, reduce the export of some goods which are in short supply in our country only. For example, onion or any other agricultural products. During some season, there will be huge demand in our own country. So when the government leave free for export or give the permission to export, so our farmers or our dealers will export that particular goods for the, because they will get higher price in the other country. So in order to get the more profit, they will export instead of selling their same products to in India only. So in order to avoid these things, in order to bring down the demand, or in order to increase the supply during the demanded season or demand when there is a huge demand or when there is a scarcity for particular product in our own country, the government of India can ban the export of particular product, and also sometimes ban the import also if that particular product is not good for our citizens, or it is explosive, or it may be guns, or it may be any other products or supplies which affects our citizens or which affects the peace of our country. Then in that situation, the government of India will ban import also. Next one, foreign exchange can be saved. So when import increases, it leads to expense of, or it leads to reduction in the foreign exchange reserve. When the export increases, the government will have much, or government will be having huge foreign exchange reserve. When import increases, government will be having deficit foreign exchange reserve. So in order to balance that, government of India can reduce the import and encourage the export. This question, so merits of custom duty will be asked for 5 marks in the exam. Keep this in mind. Again, demerits of custom duty, this point also can be asked for 5 marks. So 5 plus 5, 10 marks. So what are the advantages or merits and demerits, or advantages and disadvantages of custom duty? If they ask in exam, if they ask for 5 marks only, they will ask only advantages. If they ask for 10 marks, both advantages and disadvantages. Okay, so imposing heavy or higher custom duty taxes increases the black money. Again, so when the tax is more, the customers or the dealers will bring the goods through illegal means. So it leads to increase in the black money. Next one, better quality of goods will not be available for our customers. Even though the customers are getting better quality or higher quality goods with cheaper rate or cheaper cost. So because of custom duty, heavy duty of custom duty or heavy tax from the custom duty, customers has to bear more, or they have to pay higher amount than its actual price. Next one, complex procedure of custom duty. So in custom duty, there are 3 or 4 or 5 times of duty is levied. Again, cess will be levied. So it is the calculation or computation of custom duty is rigidity. Next one, imposing higher custom duty makes the goods costlier for our customers, and it also increases the inflation. So inflation means, so the purchasing value of the currency or the purchasing value of the money will reduce day by day. This is called as inflation. So when the government imposing higher duty, for example petrol, so even though we are getting 35 to 40 rupees of petrol, so we are paying 100 rupees. Why? Because of custom duty and other duty from the central and state governments. Next one, the following items objectives are the prohibition. So why government will prohibit the goods? These are the objectives: maintain the security of India and also maintain the public order. So if the government did not prohibit harmful products like explosives like guns and any other equipments, it leads to threat for security and public order in India. That's why government will has to prohibit some goods. Next one, smuggling auto, prevention of smuggling drugs and narcotics and also other goods, luxury goods without paying tax. They can bring the particular product to India without paying the tax. That is called smuggling. By prohibiting those goods, so which attracts more smuggling or which encourages more smuggling, those goods will be prohibited. Next one, prevention of storage of certain special goods and also conservation of foreign exchange reserve and safeguarding the balance of payment. Next point, prevention of injury to the economy. For example, if you let that particular products to enter our country, it may affect in bad way to our economy. So it may affect our local producers. So when the local producers did not produce, again they could not pay the tax to the government. They cannot provide or they cannot generate the employment opportunity to our country. So when production increases, employment increases. When production increases, tax to the government will increases. So again, so when our country or domestic produce decreases, it leads to bad effect on our economy. That's why custom duty is very important. Next one, prevention of surplus of any agricultural product. Again, so by reducing the custom duty on the agricultural product, we can improve or we can encourage the export, and also this leads to prevention of surplus and lack of demand. Next one, maintenance of standards of some classification of goods. So when we levy the goods, only higher standard goods we can export and also higher standard goods we can import. So what are the prohibited goods? Import and export. So import prohibited goods are, they will ask for 10 or 5 marks. 10 or 5 marks, they will ask this question, what are the prohibited goods? You have to mention these goods. So if you mention any 5 goods, you will get 5 marks. If they ask for 10 marks, you can mention any 10 products. Next one, arms and amenities, armored cars. Next one, antiquities. Next one, counterfeit coins, dummy pistols, dead and alive animals and birds, explosives, fictitious stamp, label impressed with a currency design, matches, narcotic drugs, negative films, psychotropic substance. Next one, quinine and saturnines. These are the items or goods which is prohibited. Next point, export prohibited. What are those? Animal casings, books containing the diagram showing the border of India, beef, cardamom, chemicals for weapons. Next one, chili and vegetables, oil products, exotic birds, endangered plants, human skeletons, Indian made wool. Next one, mechanical lighters and absence books and other publications, red sandalwood oil, specific fruits. Next one, fat of specific animals, tusarmogga, silk. Next one, wildlife and their parts, wood and wood products. So these are some wood and wood products, not all wooden products. Some wood and wooden products has been exported prohibited goods. Next one, types of custom duty. So basic custom duty, integrated goods and IGST, integrated goods and service tax, safeguard duty, additional custom duty or countervailing duty, additional duty, special additional duty, productive duty, anti-dumping duty and GST compensation. So this will be asked for 15 marks. So what are the types of custom duty? Briefly explain the custom duty. You have to explain these things. Already in the premier class we have given the explanation also, examples also. Please explain all the different types of custom duty, and social welfare charges also we can add. Social welfare charges all are part of custom duty. Okay, so we can add these things, and also you should explain with example. Keep this in mind. Write 2 to 3 lines of explanation and give 1 or 2 lines of examples. So we can write, at least we need both qualitative answer and quantitative answer. Okay, for 15 marks you have to explain all the points. Next one, what is my CIF? CIF means cost of insurance, freight and cost, insurance plus freight equals to CIF value. So this is also considered as a assessable value where the imported goods converted into India. So previously loading, unloading and handling charges were added to the CIF value at the 1% of CIF value. Now we are not adding that one. Next one, at present notional addition of 1% of CIF value is not added. Now it is removed. So what is FOB? freight and board or free on board. So this is the actual cost which is ready for supply to the India before adding insurance and loading and unloading charges. Calculate the problem from the following particular. Compute the assessable value and custom duty payable. So what is the actual cost of the machinery? It is $50,000. We have to convert the dollar to Indian currency. While converting, they will provide RBI value also, and so RBI value also will be provided. RBI value equals to some rupees per dollar. Okay, some rupees per dollar. Let's assume 70 rupees per dollar RBI value. It is also Central Board for Indirect Tax and Custom Duty, CBIC's value. It is rupees 72 rupees per dollar. So which value you consider? So we should not consider RBI value. Keep this in mind. In your question paper, if you get RBI value and CBIC value or board's value, only consider board's value. Don't consider RBI value. We should not consider RBI value while calculation of custom duty. Please consider CBIC or Central Board for Indirect Tax and Custom Duty value. So it is given the value, it is 72 rupees. RBI is given 70 rupees per dollar. Which value consider? We should consider board's value, not the RBI value, while calculation of custom duty. Now we have to add packing charges. We can add commission paid to brokerage. We can add, apart from buying commission should not be taken. Keep this in mind. Other commission we can take, buying commission we should not take. Next one, design development charges outside India we can take, and any other expenses once the goods reach to Indian port. Any expenses added from port to Indian factory we should not take. Keep this in mind. Before goods reach to our Indian port, whatever the expenses happen we can consider. So once the goods reach to Indian port or nearest port in India, from the place of the supplier, which is the nearest place. For example, to the supplier from America, Mumbai port is the nearest place. So once the goods reach to Mumbai port, if the other expenses happen or incurred by the recipient of the goods or supplier of the goods from Mumbai port to Chennai port or any other Mangalore port, that expenses cannot be added. So once the goods reach to Indian port or which is nearer port to the or head port in the India, any other expenses from port to factory, installation charges, these charges cannot be allowed under the custom duty. Next one, technical fees paid we can add. Ocean freight. See, while calculation of ocean freight, if it is ocean freight and land freight, if they given the actual freight, we can take the freight amount. For example, here they given the actual freight 3,000 rupees. If they did not give ocean freight, so according to law we have to add the freight value. We have to add the freight value. If they given the amount, we can directly take that particular amount. If they did not give the amount, 20% of the FOB value. 20% of the FOB value we should consider. Keep this in mind. 20% of the FOB value. If in case of air transportation, if it is a land transportation or sea transportation, it is 20% of FOB value. If in case air transportation, so whatever, for example, let's assume it is only air transportation. So air transportation $3,000. So in case of air transportation, 20% of the FOB value or the actual freight, whichever is lesser should be considered, even though they have given the actual freight in case of air transportation. So either the air transportation or the actual freight, whichever is lesser should be taken for calculation of freight. If in case of air transportation, so here it is ocean transportation means what? So goods transferred through ocean or through ship we are transferring. So it is actual, or if they did not give the actual amount, then 20% of the FOB value we can consider. Next one, insurance premium we can consider. So here also, while calculation of insurance, in question if you have insurance amount we can take directly. If they did not give insurance amount, so it is 1.125% of the FOB value. FOB value. So if they give the insurance amount, we can directly take the insurance amount. If they did not give in the question, according to law, we have to take the insurance. Then what amount we should consider? So it is 1.125% of the FOB value we should consider. Next point, material supplied by the importer we should consider. Next one, it may be supplied by it may be exporter or importer, but it is a before import this transaction has been occurred, we should consider. Next one, transportation charges and transit insurance premium. Port to factory we should not consider. Already I told, once the goods reach to Indian port, any other expenses we should not consider. So it is basic custom duty 10%, IGST integrated GST 18%, compensation cess 20%, social welfare charges 10%. So rate exchange notification is 70 rupees per dollar. Here in this question they are not given rupees or the exchange rate from RBI, exchange rate from board. So if they give two amounts, we should consider only board exchange rate, not the RBI exchange rate. Here they are not given like that, they directly given 70 rupees per dollar like that. So we can directly take 70 rupees. Now cost of the machine is, it is dollars. So what is the 1 USD equals to rupees 70. So like this you have to mention before doing the problem. In the left side we should mention, so 1 USD equals to 70 rupees. If in case if it is euro, 1 euro equals to some rupees, like that we have to mention. Next point, so cost of the machine, it is American dollars, Indian rupees. We have to convert this to Indian rupees. So what is the amounts of 50,000 into 70 rupees? It is 35 lakh. Next one, add the items. What are the items we have to add? Packing charges we can add, commission at 5% on 50,000. Always any commission given on the actual cost of the machine, we should calculate the commission. So 5% on 50,000, it is $500. Next one, design and development charges $3,000. Technical fees paid $2,500. So subtotal is $8,500. Again convert this to Indian rupees. So it equals to 70 rupees. So it is 5,95,000. Again add material supplied by the importer. It is directly given in the rupees, Indian rupees they are given. So directly we are taking 2 lakh rupees. Next one, FOB value. This is called as FOB value. When you add this amount, it will become 42,95,000 FOB value, freight on board or free on board value. Now add the insurance and freight charges. Here we have to add the freight charges. So while adding freight charges, if it is a ocean freight, if they did not give the amount, here in this question they are directly given the amount $3,000. If in case if they did not give the amount, it is 20% of the FOB, 20% of the FOB. This is the FOB. So 20% of this we have to consider. In case of air freight, so either the actual amount or the 20% of the FOB, whichever is lesser should consider in case of air freight. In case of land and ocean freight, only we can consider the either if they given directly direct amount, we can take directly. So otherwise we can take 20% of FOB value. Next one, insurance. If they give insurance, we can directly take the insurance amount. If they did not give the insurance, 1.125% of the FOB value. Now add it, we'll get the total assessable value. On this we should calculate the custom duty. So again, now this is the calculation of custom duty. Assessable value is, this is the assessable value 46,45,000, 46,45,000. Let's consider this as a. Again on this we should calculate 10% basic custom duty. This is the procedure. Always we have to show this procedure only. Don't go for social welfare charges then basic custom duty. Always first thing we have to calculate basic custom duty only. So first basic custom duty on the assessable value. So it is 10%. So 46,45,000 into 10% is 4,65,000. Let's consider this as a B. Again on basic custom duty we should calculate a social welfare charge. It is a cess. So tax on tax. It is called as cess. So it is a social welfare charges is 10% on this 4,65,000 into 10% equals to 46,500. Now you add 1, 2, 3. So you'll get 51,56,500. On this we should calculate the IGST 18%. So on the total value, subtotal of the, on D we should calculate the 18% of GST. So GST compensation cess 20% again on this amount. 51,56,500 into 20% will get 10,31,300. Now if you add all the amount, so here what are the items we should consider? So basic custom duty we should consider. Here social welfare charges we should consider. Again IGST we should consider. Again social the compensation cess we should consider 4. So if you add 4, so basic custom duty, social welfare charges, IGST and compensation cess. So if you add all these things, so you'll get 24,70,970 is the total custom duty payable. Again note we can write, so buying commission if they given, we should not consider the buying commission. Again we'll go for one more problem. This will be as for 15 marks problem. So this question for up to here, this is for 10 marks. Calculation of assessable value for 10 marks. Calculation of custom duty is 5 marks. Total it is 10 plus 5 equals to 15 marks question, major question. Again for 5 marks, they will give the one more problem. So from the following particular, calculate the custom duty payable. So CAF value or assessable value they have given. So we should calculate the directly. We can calculate the custom duty. Basic custom duty 10%, IGST 18%, anti-dumping duty 10%. Exchange rate given by the RBI is 68. Exchange rate given by the CBIC, Central Board for Indirect Tax, is 70 rupees. Which one we will consider? So always we should consider board rate, not the RBI rate. RBI rate we should not consider. So we should consider the board rate while calculating the custom duty. Assessable value is 23,000 into 70 rupees. It is 16 lakh 10,000. On this we should calculate the basic custom duty. Basic custom duty 10%. So it is 1,61,000. Again, on 1,61,000 we should calculate the social welfare charge. It is tax on tax. So on 10% it is 16,100. If you add all these three, you will get 17,87,100. Again, IGST on D. On this amount we should calculate the IGST. So it is 17,87,100 into 18%. So here I will write 17,87,100 into 18% equals to E. It is 3,25,678. Again, on 17,78,100 we should calculate 10% anti-dumping duty. So 17,87,100 into 10%. So it is anti-dumping duty. If you add all these things, total cost of supply or total value here. So what are the items for custom duties? Is custom duty. Custom duty we should calculate. So actual custom duty, basic custom duty we had paid, plus social welfare charges, plus IGST, third one, plus anti-dumping duty, fourth one. So you add all these three, all these four, will get 6,59,778 actual custom duty payable. This is the actual custom duty payable. Don't add this one. If you add this one, is enough. Now let's go to the note. Anti-dumping duty is calculated at a given rate on assessable value only, and social welfare charges is applicable. Next one. It is assumed that the goods imported are sold at lesser than the normal price. That's why we are calculating. Why we are calculating anti-dumping duty? So when the goods are sold in India, for example, China Mobile. Let's take the example of China Mobile. So actual cost of that China Mobile is 10,000 in China. If you purchase the same mobile in China, it is 10,000. But China, whatever the excess production got, so because of excess production in China, China is selling the goods, same mobile phone, for 5,000 rupees in India. 5,000 rupees in India. Even though its actual cost is 10,000, it is selling at 5,000. It is like, it is called dumping the product to other country or other foreign country. So in order to avoid, when the China start to sell at 5,000 rupees, Indian customers will purchase only China Mobile. It affects the Indian producers of mobile phone. That's why, in order to avoid this, again custom duty or dumping duty will be added to the extent of 5,000. Again it will become 10,000 only. So the government of India will add anti-dumping duty. Anti-dumping duty here, again it will become 10,000 only. Next, goods are not imported by SEZ or EOU. Next one, what is GST invoice? So let's go to the next chapter, is GST invoice. So GST invoice is any bill, any document. It may be purchase or it may be sale. So in order to get the ITC input tax credit, we should have all the documents to get the input tax credit. That's why we have to maintain, or we have to store all the documents. This is called as tax invoice. So in business we need to charge various taxes. It may be GST, VAT from their customers on the products and service, and report is to be given to the government. So we have to provide all the documents to the government with all the documents. This is called as invoice. Now next point, the tax invoice is issued by one registered vendor or to another get input tax credit. So here the tax invoice, only registered person can issue the tax invoice. So unregistered person cannot issue the tax invoice to get the input tax credit. So he has to produce all the documents in case of sale or in case of purchase of the product. So in case of imports, in case of purchase of imports, so he has to have all the bills to get the input tax credit, and also he has to have all the sales. While doing the sales also, he should have all the documents to show that particular, or to file the returns in the government or in the tax authority to get the input tax credit. Next one, it is just a summary of invoice that can be used for GST or HST, whether you report monthly, quarterly or annually. So reporting to the government, reporting to the tax authority, we have to provide all the information, whatever the transaction we have done, it may be purchase or sale. So that has to be reported to the tax authority to get the tax input tax credit. It may be monthly, quarterly or annually. A tax invoice must be issued when your customer is get registered. So only registered person can issue the tax invoice to another registered person. So if the recipient is unregistered person, again we cannot issue the tax invoice, because in tax invoice we have to mention the GST TIN number or unique number provided by the tax authority. We have to mention both recipient's registered number and also supplier registered number. So if one registration number is not, registered person cannot issue the tax invoice. Next point, what are the other types of invoice? So bill of supply. So if in case of bill of supply, the bill of supply is similar to the GST invoice, except for that bill of supply does not contain any tax amounted, as their seller cannot charge GST to the buyer. A bill of supply is issued to in case whether the tax cannot be charged. So if for example, if we are selling goods which are exempted from the tax, which are not comes under GST regime, so for that particular products we will issue the bill of supply. Next one, a registered person is selling a exempted goods or service, in that particular condition, on that particular time, the registered person will issue a bill of supply. Next one, registered person has opted to composition scheme. For example, if the registered person is opted for composition scheme, in that case also he will issue the bill of supply instead of invoice. Next one, invoice cum bill of supply. If the registered person is supplying both taxable products and non-taxable product or exempted product, then also he can issue the invoice cum bill of supply. Next one, if the goods are returned, that case also we will issue the debit note or credit note. Next one, the goods are supplied or returned, or the service supplied or deficient, or if the service is not properly supplied or we are not supplied the enough service, then also debit or credit note will be issued. Next one, there is any revision in the invoice value, if there is any wrong amount entered in the invoice value. Next one, a note containing such particulars is issued by the supplier and the receiver of goods or services, or both. So supplier also issue the debit or credit note, the recipient also issue the debit and credit note. What do you mean by credit note? The supplier of goods or service may issue a credit note to the recipient of the goods. So who will issue the credit note? The supplier of the goods will issue the credit note to the recipient of service if any of the both following cases: the taxable value or tax charge in tax invoice is more than the actual goods supplied or returned by the recipient, service supplied or found to be deficient. For example, if in case, so we have to charge 100 rupees tax, if we have charged 200 rupees, so in this case, if we are charged more than actual tax is 100 rupees, but we have charged 200 rupees, in this case, the supplier will issue a credit note to the recipient of the product. Next one, if the recipient of the goods return some goods for that amount also to reduce the tax for that particular returned goods, then also credit note will be issued. Next point, credit note will be having following contents. The word credit note should be there, the heading of the note should be credit note. Next one, name and address of the GST number. Next one, the consecutive serial number. So what is the actual number of particular credit note? Next one, date of the document. Next one, name and address and GST number of registered recipient. Next one, name and address of the recipient and the where we have delivered the product, that address has to be mentioned. Next one is such recipient is unregistered, name and state code of the unregistered person. Next one, serial number of the bill. Next one, value of taxable supply, what is the actual value of that particular taxable supply. Next one, signature, digital signature of the head of the institution or head of the organization. Next one, debit note, the word supplier or supplementary invoice or debit note should be there. Next one, to be indicate on the face value of the document. Next one, name and address of the GST number of the supplier, date of issue, name and address of the GST number if recipient is registered, so name and address of that recipient. Next one, if the GST is not registered, name of the state and its code. Next one, serial number of that particular tax invoice. Next one, tax value supplied by the receiver or both. Next one, rate of tax and the amount of tax. Next one, signature of digital, signature of the head of the organization should be there. So debit note and credit note will be asked for 5 or 10 marks. If they ask both debit note and credit note, 5 plus 5, it is 10 marks. Contents of debit notes, 5 marks. What, write a note on debit note, write a note on credit note. So we can expect this point for 5 or 10 marks. Very important questions. So this question will be asked for 5 marks or 10 marks. Very important questions. So in the next session we will meet once again. Till then, thank you so much.